Good morning, everybody. This is Fred Meissner with the Fred Report Technical Market Call for July 14th, 2011. Do want to just tell everybody I'm having a little bit of internet trouble here, so my quotes are not up to snuff. But given that, we can still do the call, and we'll get right into it. I guess the first thing is our forecast for this week has been a choppy market, basically holding the 132 area on the spider, but hoping for 130.50 to add. And as we go through the week here, guys, it's looking as if that 130.50 is simply not going to be in the cards. I will say it is expiration week shenanigans. All sorts of stuff can happen, but my guess now is we drift up and or rally fairly strongly up, but close the week down and probably close in the 134 area on the spiders, i.e., say another $1.40 up from this general area. And if we do that, that will set us up for a fairly strong week. Y'all will remember that we were thinking that we could have some sort of a low this week after the monthlies bottomed in June. The big surge off the bottom happened a few days earlier than we thought it would, but basically most of my time cycles bottom this week and turn up. So if we do have a down week this week, we could be looking at a couple of strong weeks into the end of July and possibly into the end of August. So for guys that have been, relatively lightly invested and that are up at, say, 75%, like a couple of people I've talked to, I would use the remainder of this week on down moves and choppiness to become fully invested for a strong week next week. We note that the TLT bond has popped up back into the 97 area. Not a surprise. We were looking for that to happen. And even if I'm wrong on interest rates, and even if the TLT actually goes up from 96 to, say, 100, which was our original trading objective, although we're out of time for that in my opinion, I still feel there's a lot more zap in the stock market than the bond market. In other words, we got a lot more risk reward in stocks here. So, yeah, I would be using this bond move back up into the 96, 97 area to make sure that any trading positions you're out of, and realize that if we break down through 95 one more time, that will probably complete a double top formation. If we break down through 92, that will confirm it, and that will say we're on the way back to 90 or 88. Not a catastrophe if you're a bond investor, but obviously your chance for long-term capital gains is gone at that point. So, from my point of view, you want to be switching from stocks to bonds here. Bonds to stocks here, and not the other way around. We've had a number of questions on the metals and golds in terms of what's outperforming and so on and so forth. So let's go into it in this way. First of all, when you look at GLD, when you look at gold, when you look at IAU, gold is at all-time highs, and it looks like it's on its way to our 169 target price. When I look at gold, I figure it's outperforming silver on an intermediate term basis simply because it's at all-time highs and silver's nowhere near all-time highs. And one good way to look at this is if you had bought gold when we were talking about selling it back in April, May, and you were filled at 152, which was our target price to actually get out, and you sat with it the whole time, you'd be at a profit now. Whereas if you were to do the same thing on SLV, you would still be at a substantial loss. Now, from a trading perspective, we have a lot of people that want to trade silver, and I think silver can make it to 40. So percentage gains on silver can be good, but if you're a long-term investor, if you're trying to put this into a portfolio, I would certainly still be adding IAU or GLD. If you're stuck in silver and silver gets up around 40 on the SLV, it may be worth selling some of that SLV and buying IAU and diversifying your exposure a little bit. It's nice that the SLV is trading around 40 and IAU is around 15. That means you can sell half and buy the same amount of shares of IAU. And that way you are in, I think, a much better position, and that's what I would do myself. Obviously, I believe in gold longer term, but this market is working, and it looks like it's going to continue to work. When I look at the agriculturals like JJG, those are also picking up. Those should do well into summer. The only thing that has been acting a little bit on the punk side, as my grandmother used to say, there are two. Natural gas doesn't look so good here. If you look at the UNG and you look at natural gas futures, those are lagging substantially as they normally do in the summer. If you're willing to buy something to do with natural gas and hold on through winter, you will probably do okay. When I look at some of the some of the oil ETFs like USO and DBO, those look like they bottomed, they filled gaps. Anything on USO above 40 probably targets at least 42 to 44 and should be very strong. And we will reiterate right now, going into August, we still want to overweight energy. The sector report will be coming out this week. That's one thing that we will not change. Energy looks very good to us, and those energy stocks that we've talked about look good. So XLE, which was one of the questions that was just emailed in, that looks good. That's one of my favorite ETFs at this time. We're going to go into the stock section now, and